Dumela, let me do example 2 relating to tangible assets. This seems to be one of the challenging adjustments that students struggle with. It says here, very mark trading as very Tasty Stores started his business on the 1st of March 2020. On this date, he bought the vehicle for 300,000 and equipment for 200,000. So that's when the business started, on the 1st of March 2020. He paid by EFT for both items on the first day of March 2021 of the second year of trading. Very Tasty Stores will have the following balances in their general ledger. For vehicles, they've got 300,000, equipment is 200,000. Obviously, the cost of these two will not change. Accumulated depreciation on vehicles was 60,000 and accumulated depreciation on equipment was 50,000. Now, according to the adjustments, vehicles are depreciated at 20% according to the fixed installment method, and equipment is depreciated at 25% according to the diminishing balance method. I am going to start by calculating depreciation on vehicles, which is according to the fixed installment method. However, I will emphasize this all the time. Please remember, before you calculate current year depreciation, you need to first calculate the carrying value of that specific asset at the beginning of the financial year. Let's start with the depreciation of vehicles. Right at the beginning of the year, which will be the 1st of March 2021, the cost price of these vehicles on that specific date amounted to 300,000, and accumulated depreciation on that day amounted to 60,000, giving you a carrying value of 240,000. Someone might be asking themselves, but why do we need to calculate carrying value at the beginning of the year when this vehicle is not depreciated on diminishing balance method? I will explain this in a moment. Now, do we all agree that this vehicle was used for 12 months and we are depreciating it at 20% and not 25%? The depreciation method doesn't change anything. We are still going to take the cost price, which is 300,000, and multiplied by 20% and multiplied by 12 over 12 because we've used this vehicle for 12 months. That will give us 60,000. Now, here's why I needed to calculate depreciation. Accumulated depreciation, not accumulated depreciation, carrying value at the beginning of the year. Do you see this carrying value here? We calculated it to ensure that that 60,000 does not exceed that 240,000. Always ensure that current year depreciation never exceeds carrying value at the beginning of the year. If current year depreciation exceeds carrying value at the beginning of the year, then write this down. Limit current year depreciation to the carrying value at the beginning of the year minus 1. Did you get that? Let's say our current year depreciation was 250,000. We were going to limit means we cannot exceed that value. We are going to limit it to the carrying value at the beginning of the year minus 1. So we are going to limit it to 239,999. Do you get that? But in this specific example, Our depreciation for the current year does not exceed carrying value at the beginning of the year, so there is no reason for us to limit it. So we will recognize the full depreciation of 60,000 Rand on these vehicles. Okay, before I record it, I will quickly calculate depreciation on equipment, which must be at 25% on diminishing balance according to the diminishing balance method or carrying value method or book value method. Okay. Again, we're going to start with the financial year, which starts on the 1st of March 2020 and it ends on the 28th of February 2021. Now, still we're calculating depreciation on carrying value. And cost price on this equipment at the beginning of the year was 200,000. Accumulated depreciation on equipment at the beginning of the year amounted to 550,000. That leaves our carrying value at the beginning of the year to 150,000. We used this equipment for 12 months and we are going to depreciate it at 25%. Are we going to use 200,000 Rand to calculate depreciation or are we going to use the 150,000 Rand? We are going to use the 150,000 Rand. You will take, because we are depreciating this according to the carrying value method, we will take the 150,000 Rand, which is the carrying value of this equipment at the beginning of the financial year. Take 150,000 Rand multiplied by 25%. That'll give us depreciation on this equipment, which will amount to 37,500. Again, we need to make sure that 37,500 does not exceed carrying value at the beginning of the year. Of which under diminishing balance method, that is improbable, highly, highly impossible. Okay, let us record this. Remember, depreciation on vehicles amounted to, oh my word, it amounted to 60,000. And depreciation on equipment amounts to 37,500. To recall this, you will debit depreciation. And the reason why we debit depreciation, it is because it is an expense account. Okay, never mind N19. N19 means that it's account number 19 under the nominal accounts section. Now, note that I'm going to debit depreciation by 97,500. But what makes up this 97,500? It is made up of depreciation on vehicles, which was 60,000. And when you recognize depreciation, you debit depreciation, you credit the accumulated depreciation of the assets that you are depreciating. And that is because accumulated depreciation helps us devalue the asset. That is why when we recognize accumulated depreciation, we credit it. It's because it reduces the value of your asset. Depreciation reduces your assets. Accumulated depreciation is the total value of that your asset has lost. And that is why we are going to credit accumulated depreciation on vehicles at that amount, which amounted to 60,000, and then credit accumulated depreciation on equipment, which amounted to 37,500. When you add 60,000 with 37,500, it'll give you that 97,500. I also explained why I did this. Accumulated depreciation is a reduction of the cost price of an asset. It therefore increases on the credit side whenever depreciation is recognized. So whenever you recognize depreciation, you debit depreciation, which is an expense, and then you credit accumulated depreciation, which is just a valuation allowance. Please note that the cost of your vehicles has not changed. It is still sitting at 300,000, and the cost of your equipment has also not changed. It is still sitting at 200,000. However, accumulated depreciation has actually increased on vehicles because accumulated depreciation is a minus plus. We had a balance for accumulated depreciation at the beginning of the year, which was 60,000 rand. If you're wondering how we got that 60,000 rand, that should be 2021, March 2021. The balance brought down on when it comes to accumulated depreciation on vehicles was 60,000. Please check out the previous video that deals with depreciation to see how I actually got that 60,000 rand. However, we also recognized current year depreciation, and the current year depreciation on this vehicle also amounted to 60,000 rand. Now, we are going to credit this account because it is going up. We will credit it by another 60,000 rand. That takes up our accumulated depreciation from 60,000 rand to 120,000 rand, to 120,000 rand. And that will be the balance carried down. Basically, when we start the new financial year of 2022, we will start with accumulated depreciation on vehicles amounting to that 120,000 rand. All right, let us move to accumulated depreciation on equipment. At the beginning of the year, accumulated depreciation on equipment was 50,000 rand, and during the year, we had to calculate depreciation for the entire year, which we recognized on the 28th of February 2022. And that amounted to its accumulated depreciation on equipment. So we will credit this with your depreciation. It comes from your general journal, and the amount will be 37,500, which will give us 87,500. And that 87,500 will be our balance carried down. So when we start the new financial year, we will start with accumulated depreciation on equipment of 87,500 rand. Now, to complete your depreciation account, please note that this is an expense account. It increases on the debit side by that year's depreciation. So only depreciation for 2022 financial year, which will be from equipment. It will be accumulated depreciation on equipment, and from vehicles, it will be accumulated depreciation on vehicles. Let's start with accumulated depreciation on vehicles, and that amounted to 60,000, and accumulated depreciation on equipment will amount to 37,500. Obviously, we won't have balance carried down for this nominal account section. We will close it off against profit or loss. You will learn later about that. Please read the explanatory notes. In your statement of profit or loss, you are going to recognize current year depreciation, which is made up of depreciation on vehicles of 60,000 added with accumulated depreciation on equipment, which is 37,500. Therefore, when you complete your income statement or your statement of profit or loss, your total depreciation for the 2022 financial year will be that 97,500. Okay, I didn't really ask the accounting equation, but this is how you will actually prepare the accounting equation. That 60,000 under owner's equity is your depreciation expense, and the 60,000 under assets, it's your accumulated depreciation on vehicles. It reduces the value of your assets. Similarly, with your accumulated depreciation on equipment, it will work the same way. How do we record this? As I've said, you will start with the cost price of equipment. I'm going to start with equipment. Cost price of equipment at the beginning of the year was 200,000. and accumulated depreciation on equipment at the beginning of the year was 50,000. And that will give us the carrying value of 150,000 rand. How did I get that 150,000 rand? I took the cost price of 200,000, then you minus accumulated depreciation at the beginning of the year, which is 50,000. Then we'll have carrying value at the beginning of the year amounting to 150,000. We did not buy any equipment, therefore under additions we'll have zero. We did not sell any equipment, that's why under disposals we'll have zero, and the depreciation on equipment for the current year amounted to 50,000 rand. And that is the only movement you are going to have. So under movements, it's additions at cost, disposals at carrying value, and depreciation. Only disposals at carrying value and current year depreciation will be in brackets. That 37,500 will be under movements, and we are going to put it as such. Cost at the beginning of the year is 200,000. Accumulated depreciation at the end of the year will be 50,000 rand. Okay, and that will give us, actually, it won't be 50,000 rand. It will be that 37,500 plus the 50,000 rand we had at the beginning of the financial year. And I gave you the formula there to calculate accumulated depreciation at the end of the year. You will take accumulated depreciation at the beginning of the year, add current year depreciation. So it'll be 50,000 at the beginning of the year plus 37,500, which is the current year depreciation. And then you minus accumulated depreciation of the assets sold, of which we don't have the information of here. We did not sell any equipment. Therefore, our accumulated depreciation at the end of the year will just be the 50,000 rand plus the 37,500. Now you will take the 200,000 and minus 87,500. That'll give you 112,500. If you have been paying attention, you will notice that this is the carrying value at the end of the financial year, just on equipment. When it comes to vehicles, the cost price of vehicles at the beginning of the year was 300,000. Accumulated depreciation of vehicles at the beginning of the year was 60,000. Take 300,000 minus 60,000, you will get 240,000. Now you'll have additions at cost of zero, carrying value, disposals at carrying value of zero, and then you'll have depreciation on vehicles amounting to 60,000. And that will be our movement. Now you will simply have the cost price at the end of the year is still the same because we did not sell any vehicle, we did not buy any vehicle, so our cost price will still remain the same. Accumulated depreciation at the end of the year will be balanced at the beginning of the year of 60,000 and current year depreciation of 60,000. That gives us 120,000. And at the end of the year, accumulated depreciation on vehicles will be 120,000. Now, carrying value at the end of the year will be 300,000 minus 120,000, and that will give us 180,000. Another way of getting this 180,000 will be this. You will take carrying value at the beginning of the year, and then you add or subtract the movements, then it should give you carrying value at the end of the year. You got that? That's another method. When you take this carrying value on vehicles at the end of the year and you add it with your carrying value of equipment at the end of the year, that will give you carrying value of all your tangible assets. Okay, it'll give you carrying value of all your tangible assets. Okay, now in the statement of financial position as at 28th of February 2022, under non-current assets, you will have tangible assets at carrying value, which is the sum of the carrying value of your equipment, which is 112,500 plus 180,000. That will give you 292,500. That right? You got it right? Let's see if you got it. Try this example out and prepare the general journal and the following ledger accounts. Also prepare the statement of profit or loss as well as your tangible assets note. Also, please calculate the carrying value that we are going to take to the statement of financial position under non-current asset in your i.e. the balance sheet. Okay? Did it help? I hope it did. Please don't forget to subscribe, like, and comment. Please share with all your friends. Thank you for watching. Khotso.